In this episode, I'm going to walk you through how a stock is able to go up over 400% in one day. It happened today. This is just the latest example. This will be our case study of the pattern that is repeating itself in the market again and again and again. And I want to teach you how to capitalize on it by showing you and explaining the ingredients, the criteria for these stocks making these explosive moves. So let's set some context here. If the overall market goes up 20% in 1 year, investors are thrilled. But naturally, there are individual stocks that far exceed 20% in 1 year. And of course, there are stocks that underperform. What we're looking for as active investors and traders, we're looking for the stocks that are outperforming, and we're looking to trade them on the individual days when they're making big moves. So what is it ultimately that creates this type of momentum? It's news. 95% of the time, it's a stock that has really good news. Now, the interesting thing here is that the stock that we're looking at today is our just latest case study. This happens to be a biotech stock. And biotech stocks are a real favorite among daily traders like myself, or day traders, if you'd like to call us that, because when these companies have news that's good, they can really go crazy. A lot of biotech stocks, the companies are operating at a net loss. All right. So they're funded by investors who continue to put money into the company so the company can do research and development, trying to find cures for different illnesses and diseases, which is really a great thing. And if these companies end up finding success with one of the treatments they're working on, suddenly that makes them a candidate for a buyout, right? All of a sudden, now they've got a product that's going to come to market, and the big companies, the big pharmaceutical companies, they'll come in, they'll open the checkbook, and they'll just buy out an entire small cap stock, just like that. And they usually do it for a really big premium on the current trading price. So that speculation is something that drives a lot of momentum, specifically within the pharmaceutical biotech sector. But that's not the only sector where we see this type of momentum. So if we start high level, what we're looking for is a stock that has news. And my goal for this episode right here is that I'm able to share with you the ingredients, the catalysts, the criteria that give way to these big moves, so you can start to recognize this pattern that continues to repeat itself. Which means if you're recognizing it, you're going to start to learn that you want to participate in the action. And so hopefully you're able to start to capitalize on this volatility. Because when a stock goes up 400% in 1 day, I mean, guys, this is a huge opportunity. Naturally, there are people that lost money on this. It's certainly possible to lose money on this type of stock because it's volatile. But if you're looking to grow an account, aren't you going to be looking for something that's going up 400% in 1 day? I mean, this is what we look for. I don't trade stocks like Bank of America that go sideways. A stock going sideways, getting a sliver of nothing is nothing. Getting a sliver of something going up 400%, well, that's something I can work with. So let's jump into the screen share. I want you to look at this chart just for a second. So high level, we're going to start high level, and then we're going to do a deep dive. So for those of you guys who are brand new to the channel, by the way, let me introduce myself. My name is Ross Cameron. I'm a full-time trader, as you probably already know. I've made over $10 million trading the markets. And those results, while they're not typical, while my experience has not been typical, it does put me in a unique position to give you my opinion and share my commentary on these types of moves. And I hope some of these tips and tricks I share with you help you in your own trading. So let's look back at this chart here. SLNO, this is the stock ticker today. And you can see basically the stock started squeezing up and pretty much never looked back. It started at $4 and about 50 cents, and it went up to over $30 a share. And that's just in 1 day. This is one trading session. This is the move. This is intense. Now, I do have some live trading archives that I'm going to show and share with you guys. So you can watch these during this episode here. Some of them I've uploaded as shorts. Some of them haven't been published yet. So for those of you guys that want to kind of really drill into the exact entries, we'll do that in this episode as well. But high level, what happened was this stock releases news at 7:30. It's a biotech stock. We've got our news headlines here. At 7:30 a.m., clinical stage biotech said its lead pipeline candidate fared well in a study to treat a rare genetic disorder. And I understand why some traders are like, doesn't sound all that exciting. But with these biotech stocks, that can be enough. So when this move first started, you might ask, Ross, how in the world did you find this needle in the haystack, this one particular stock today? So this stock is the outlier for today. It made the biggest move of any stock on the market today. Actually, there might have been one penny stock that made a bigger move, but in any case, it was within the top 2 biggest movers in the market today. All right, so how did I find the needle in the haystack? So what I do, I use this criteria right here. I know that stocks that have the potential to make the biggest moves have news, but I know before they go up 400%, they'll definitely be up at least 10%. And they'll have high volume relative to what's normal, which I'll explain more in a second. They're usually priced between 2 and 20, and they typically have a float of under 20 million shares. So I start my day by looking for all the stocks that meet this criteria right here. And that is my scanner right here on the side. So this is a stock scanner that I'm using to help me search the market for these types of stocks. So SLNO was on my scanner basically immediately this morning, but I'll admit I wasn't so sure about it at first. So here was my issue. When it first hit the scanner, I saw that it popped up, but I also noticed this big candle. If you notice right here, this topping tail. When you have a stock that squeezes up like that and then gets pushed back down, that's a sign of weakness. So I saw that and I was like, well, I don't know if I like that. And then it went red on this next candle, which I didn't really like a lot either. It bounces back up to like 660, and it does consolidate here for a moment before breaking higher. But as it broke higher, it again had another topping tail up here at about 726. So another one of those candles where it's kind of up here and then back down. For some of you guys who are newer to the market, I might already be going a little over your head by doing this kind of candlestick analysis. This is the way I look at and analyze a stock. So my first order of business each day is using my scanner. So my scanner is searching for stocks that are up at least 10%, right? And basically what I do is I look for the leading percentage gainers. I look at the leaders first because those are the most exciting ones each day. And this was the leader. So at that time, so I looked at that as the leader and I was like, okay, well, what's the news? I saw that there was news. Okay. Then I checked the volume. And at this time, the volume was a little light. And that for me was what gave me pause, because I thought, well, if the news is really good, we're going to see more volume come in. But right now the volume is a little light. So one of the things that I noted here was 5 times relative volume. So if we look at the average volume of this stock on the daily, we'll notice that yesterday it traded with 150,000 shares of volume. Okay, so today it has 40 million. That is a huge jump in relative volume. So its average volume over the last several weeks is like 200,000 shares a day. So ultimately, as soon as it crossed over, 3, 4, 500,000 shares at 7:30 in the morning, it was pretty clear that this was going to be a day where the stock had really high relative volume. High relative volume goes hand in hand with big moves. So when you start to see the stock moving and you're seeing that high relative volume, you learn these are the ingredients that can result in things getting a little exciting. One of the other things I mentioned was the float. The float is the number of shares available to trade, and we have that listed here at 5.6 million. So 5.6 million shares is a relatively small float. For those that aren't familiar, when a company does its initial public offering, they sell shares onto the market. And from that point forward, that's the number of shares available to trade. It's a closed market. So every time you're buying and selling, you're trading within that pool of shares. So this represents the level of supply. Okay, so this is our supply right here. We've got supply, and then up here we have demand. So ultimately, when you have a stock that has a low level of supply combined with these factors which create high demand, that's when we get these explosive moves. And you can get these kind of moves really in almost any type of stock. I mean, we've seen it before in energy stocks. We've seen it in different types of tech stocks. We've seen it in really stocks of almost every category. So you might think that this is really exclusive to biotech or something like that. And although biotech stocks do give us some of our biggest moves, that's not the only sector that creates these big moves. So really, the more important thing here, more important than the sector, is that imbalance between supply and demand. So when you have a company, you have companies like Tesla that'll come out with good news, but they don't go up 400% in one day, right? So they have a huge level of supply because they've sold a lot of shares onto the market, and they can make fairly big moves, but they're not going to make moves like these small cap stocks. So for a trader like myself, and when I came into the market, my goal was trying to pull out a couple $100 a day. I found that it was more consistent when I focused on these types of stocks each day. So I do not trade the same stock every day. That's not my strategy. And I know some people talk about that. Just get really good at trading Tesla and trade it every single day. I don't think that's a smart way to do it. I think that's very, very difficult. I think what's easier, and again, trading is difficult, but there's a spectrum. I think what's easier is focusing on the stocks making these really big moves, because again, even just a small piece of 400%, there's a lot of potential there. So I found SLNO on the scanners, and as I'm going through the chart, I'm beginning to kind of break it down and look at the setups, and I'm thinking, okay, this stock does have these topping tails. I'm a little bit unsure about it, but what I noticed was it started to pull away, and it started to pull away quickly. As it broke over 750, it went straight to 815. And then it pops up here to 838, and then it goes up to 9. And so right here, you'll notice that it tapped 888 and then pulled back. Right in there, just for a second. That's called a micro pullback. And that was where I took my first trade. So I got in there right there for the dip under $9. And I took profit as it broke through 9. And this thing, as it broke through 9, it went all the way to 10, up to 10.49, all the way up to $14.59. So again, just for perspective here, this is a trade where I got in at $8.92, right around there. So 10% on this is 89 cents. This thing went up $4 a share, and then it squeezes all the way to 18 within 4 minutes. This was really impressive. However, what does this candle tell us? This candle is communicating a message. So as traders, we're combining a lot of different things to make our decisions. We're looking at what are our supply demand characteristics. What is the float? What's the relative volume? What's the news? And then we're looking at the technicals of the chart. What is the chart telling us? What are these individual candlesticks telling us? But these are all patterns that continue to repeat. Just like the characteristics, the ingredients for a stock to go up 400%, that's the common denominator with all these big moves. So as long as we have that, we know we've got potential. And then when we look at that daily chart, we realize, wow, this daily chart, it's got a tremendous amount of room. There's really no nearby resistance at all. And once it starts to get up a little higher, there was this nice gap on the chart right in here. Okay, so this is kind of where we ended up coming into resistance. It was like right about here. And we ended up being able to break through it. And we knew once we broke through that level, we had room all the way up towards $38. That's a big window on the chart. It was formed by a gap down, a time when the company had bad news a couple of years ago, right? But now as it's curling back up, it just blew through 2 years of selling from one news catalyst today. That's incredible. So as I was looking at that chart, this is where we got this topping tail right here. So let me show you, I'll show you this first trade right in here. Okay, so this is when the stock was still at the very beginning of its move, ultimately. It's up 188%. So it hit $14 and about 28 cents. And then it sells off. It dips down here to a low of under 13. Now it's bouncing back up to 13.78, 14.20. Look at this. Watch what happens right here. When this breaks the new high, and it's breaking it right now, watch what happens. And this is where some early short sellers cover. All of a sudden, they're covering at 16. They're pressing the buy button. They're covering at 17. They're covering at 18. The ask was 18.36. Now, the thing that happens here, usually a long bias trader is not just going to be pressing buy up that high. Who's pressing buy that high up? Usually, it's going to be a short seller who sold the position, hoping to cover it as the stock dropped, but is now watching the stock squeezing to new highs and is pressing the buy button to basically panic out of the loss. So they press buy, and then there's not a lot of sellers because remember, we've got the supply-demand imbalance is pretty extreme. So what ultimately happened there, I think, was a little bit of a short squeeze. Some early short sellers got squeezed out. All right, so we get that little squeeze up to 18, but what ends up happening is it pulls back. We get this sort of dramatic topping tail candle, and it drops all the way back to 16 on the bid, right back down to 16, and then it breaks 16, and it goes, there's a seller there at 16.53. Now it goes to 15, just like that, 14.63. Wow. So you can imagine that this is an area that's a little bit hard to manage risk. Rightfully so. So for long bias traders like myself, I got in a little bit earlier, down around 18.92. And then as it squeezed up, I took profit, and I was already out by the time it was making this big extension, right? So there's that topping tail. That's that reversal candle as it comes back down. So this ended up giving us another opportunity a little bit later, which was interesting. So early on, some of the first moves on it were a little bit difficult because the spreads were big. We had a lot of volatility, but we didn't have as much liquidity as I would like. This was when things got a little bit more interesting. When it curled back up right here, because this occurred on higher volume. That pullback right there. Let's see. Let's look at that trade. I think I have that trade on here. All right. So right here, it's starting to curl back up. So in this area, I started getting interested, and I'm sitting at 1200 on the day. I take a quick trade there, book a little bit of profit up to 1500 on the day, goes up to 1540, goes up to 16, goes up to 17. I take a little trade up here, and now I'm up 2200 on the day, and watch. This does a near perfect double top. Remember the previous high was 18? This just came right back to 18. So we take profit as it goes up to that level and then watching for a pullback. So as it pulls back right in here, I'm looking to take an entry for a break over 18. And let's watch this trade for a second. So right here, I've got my order entered for 1,500 shares. So what you're looking at here on this screen, this is my actual trading platform right here with real money. This is the level 2 of the market. So this is showing the stock with the buyers and the sellers, and it's showing the orders that are going through. This is our chart, and the pattern that I'm working with is we had a double top consolidation that's called a cup and handle, right? So that's a cup, that's the handle. This is the long right here. I add at 1778. This is a pattern that I trade all the time. So watch 1778. Boom, I get in right there. I add for the break of 18. When it breaks new highs, watch what happens. Straight to $19 on the ask. 19 on the ask. So you could say that that was about $4,750 of profit in perhaps 3 seconds based on knowing what the breakout price was. I knew that if this broke through the high right here, that we would get a big move. And we got a squeeze on this all the way up to nearly $21 a share. So that was actually my best trade of the day. But something that I will remind you is easy come, easy go. If you thought that was a cool looking trade, I'm going to show you a trade in just a moment where I lost about $6,000 in 18 seconds. Okay, so this stock continues to be volatile. Again, volatility is opportunity. Look at that squeeze there up to a high of 24.19. All right, so the market opens, it sells off, and once the market opens, we start dealing with circuit breaker halts. So we halt up, we open low, we sell off. We pop up, we drop down, we halt down. We gap back up, we halt. I think we halted in here. Then we rip up, we open, we dip. So we're getting into some chop. I took a little bit of an aggressive trade up here for the break of 25 and see what ended up happening. So do you see this double top? I thought it was going to break through right there and continue higher. I ended up making a little bit of a heat of the moment decision, which was the wrong decision. Let me show you this trade. I'm going to pull it up here for you. All right, so let's see. All right, so this was... Okay, so this was my loss that I took on it. This was the about $6,000 loss. All right, so let me show you this trade. Okay, so here we go. All right, so right here, this stock is coming back up here to about 25, and as I saw it coming up, I punched it right there, and what I thought was going to happen, just the way it broke through 18 and ripped up to 21 almost, I thought that was going to happen right here. I made a little bit of a risk error here, which was that I took a little bit too much risk relative to the price of the stock now being at 25, a little more expensive, and also relative to where I was at on the day. It ends up not breaking 25, and look at how quickly it drops to 24 and to 23, 26, and just like that, in about 18 seconds, I'm down $5,000. One of the things that's really important, especially for beginner traders, is focusing on the highest quality setups. This was admittedly a higher risk setup. And I stepped up to the plate, I took a little bit of risk, and on that one, I lost. And that's the way it goes. You have to be able to let those losses just kind of, let them go, brush it off. It's part of trading, it happens, and move forward. You can't just keep dwelling on them. That's not going to get you anywhere. Because here's the fact on this stock. It hit a high there of $25. And then what happens a little bit later in the day? A little bit later in the day, I came back. I said, here we go. Boom. We got a trade right there on that break. And that one gave $2 a share up to $25.94. And then look, it comes up again. It goes up to 26. Then it goes up to 27 to 28. Pullback goes up to 29, almost to 30. And then right there, it hits the high of day of $30.30. Learning to trade these stocks, there's different people will approach it in different ways. Some people are just going to take the approach of, I'm just going to buy it and I'm going to hold it for a couple hours and let's see what happens. I am much more precise. I try to focus on chart patterns that I'm familiar with. One of my favorite patterns is doing a pullback setup. So it doesn't really matter what time frame it's on. I prefer the 1 minute. So the stock is squeezing up, and then it pulls back here, and I like to get in right at that price there. That's my apex, that's my entry to ride the wave back up to the new high. So stocks trade in these kind of rhythms. They go up, and then they get extended and they pull back. And so our job is to try to time, when is this going to change directions? If you get in and it's still going down, the tide's still going out. So it's like you need some little indicator that it's turning. So I use a couple rules of thumb. When a stock makes a big move up like this, you've got a couple of nice big green candles, I never want it to pull back more than 50% of that move. So if it retraces that much, to me, the pattern is broken. It's pulled back too much. We also use standard moving averages, and they're exponential moving averages, not simple, but they're just your typical moving average. I'm totally okay with the stock coming down towards a moving average, but I don't want to see it break below the moving average. That's another thing. That's a no-go. So I don't want to see it go below more than 50%. I don't want to see it break a moving average. And the way I time it, I let it squeeze up, I let it pull back, and then the second this candle makes a new high right there, that's where I'm getting in. Okay, so by doing that, I'm waiting for that first sign of strength. Now, there's certainly times where you get that sign of strength, it goes up, and then it goes kind of sideways and comes back down. All right, so in that case, I can usually stop out nearly break even or for a very small loss, and those are trades that don't work. That's fine. On trades that do work, they continue going higher. The area where traders can tend to get more aggressive is trading the stocks at the highs. This is when emotions come out. So when I add right here for that high a day break, that's a higher risk trade. But with the high risk is also the reward potential that if we squeeze through that level, remember how we got that squeeze from $14 to $18. And then we got that squeeze from 18 or 19 up to 20. And then we got that other one up to 24. When you start to get those types of big squeezes, that's the reward that justifies taking a little bit more risk. I'm a big advocate for beginner traders to focus on, of course, trading in a simulator before you put real money on the line, and build a track record. Build a track record of consistency. So first, when you're trading a simulator, you want to trade a lot. You trade a ton because you want to gain experience. You want to get good at reading the tape, that order book that I was showing you. You want to get good at seeing these chart patterns. And what you want to do is you want to print out all of these little chart patterns and put them all around your desk. So you're seeing them while you're watching the market. That starts to ingrain that pattern recognition into your brain. That's what you've got to do. And look, I've been doing this for a long time. I took my first trades with real money when I was in high school. I'm 38 years old now. So I've been in the market in one way or another for a long time. And even now, look, I still made a mistake today. There's always room for improvement. You're never going to be perfect. But here's the thing. This is a puzzle. To me, it's like a game, and it's incredibly satisfying when you solve the puzzle, because that's when you walk away with profit. But it's not, there's no real such thing as perfection. And I think that's something that's really cool about this, because you can always try to get a little bit better. So yes, this happened today. And if you're watching this tonight and you didn't trade it, or you're watching this a month from now or a year from now, you missed this pattern. But focus on learning from this example, learn from the other case studies I have, and keep trying to gain a little bit more experience. So first you trade in a simulator, protect yourself from losing any real money. It's not worth it, right? And then you flip the switch, start trading with real money, but you focus on taking just one trade a day that has the highest probability of success. Less is more. Now what you're trying to do is put together 5 to 10 green days in a row, right? If you can trade 10 days and be green 7 of the 10, that's 70% accuracy, that's really good. That's where you're starting to build consistency, you're starting to build confidence, and that's the beginning of your trading career. So to get you from where you're at now to there, that's your big milestone. There's a lot of steps in between. But I think it begins with understanding the criteria for a stock to make a big move like that. Learning to recognize the pattern. Starting to practice to see, can you look at a scanner in the mornings, like the scanner that I have here, can you start to understand which of these stocks have the highest probability of making a big move? Do you think it'll be the one with a 50 million share flow or the one with a 5 million share flow? And this one is a little bit of an anomaly because it has no volume, just FYI. This is actually probably a reverse split. All right, so disregard that one because that's got a high float, but it's got no volume. But once you kind of learn the pattern, that's half the battle. So learn to recognize which are the right stocks to trade. If you're choosing the right stocks each day, you're doing something right. Now, even if you're not making money on them, you're still doing something right because you're identifying the right stocks to trade. Now the question is, what are the lowest risk patterns? You could have taken 1,000 trades on this today if you wanted. I took more trades on it than I probably should have. I could have been a little bit more of a sniper and just taken, one good trade down here and maybe been done for the day. But here's the thing I like to say with trading. You're always doing one of two things. You're either leaving money on the table or you're giving back profit. Today I gave back a little profit, but I still ended up finishing the day green, which is great. But you never know exactly the right time to walk away. When the market's hot, sometimes you feel like you should push it a little harder. When it's cold, you feel like you should walk sooner. So I get it. If you gave back some profit today, I get it. I'm right there with you. You feel like something's moving, you should trade it more. Sometimes though, less is more. And especially for a beginner trader, don't worry about how much profit you're leaving on a table. Your job is to get in, get green, lock it up, and come back and do it again tomorrow. If you found this episode interesting, there's going to be an episode right here that YouTube thinks that you would love. So check that out, and I hope you subscribe to the channel and hit the thumbs up if you found this episode interesting. And I'll see you right here for the next episode real soon.